copy trade. We copy trade.
Welcome back, WeMasterTrade family. So, imagine this, you're a skilled trader, you spend hours mastering charts, studying the market, sharpening your edge. But one thing's always hold you back, capital and risk. But what if someone believes in your talent enough to back your trades? What if you could access thousands of dollars in funding without risking your own money? Welcome to WeMasterTrade, where your skill meets your capital.
And WeMasterTrade isn't just another platform in the grounded space. We're something different, something bold. We're what we call an angel funding project. Why angel? Because we don't just fund traders, we invest in them, we guide them and help them scale their potential into real consistent profits. Think of us as your trading partner, the silent force behind your charts, your trades and your growth.
And the best part, we take the risk so you can focus on what you do best, trading smart. No pressure of losing your own capitals, no more emotional trading due to fears of personal loss. With WeMasterTrade, you are finally free to trade with clarity, controls and confidence. And guess what? You still to keep up to 90% of the profits. Sound like the dreams. It's not, it's our model.
So our mission is simple but powerful, to empower serious skilled traders with capital, tools and a community so they can thrive in the global market. So that means we're building more than a platform, we're building a platform that recognizes you, the trader, as the asset worth investing in.
And it doesn't matter where you come from, your background, your budget, or your story. If you got discipline, strategy, and the mindset to grow, you got the capital to fuel your journey.
So, if you are ready to start trading small and start thinking big, welcome to WeMasterTrade, where your talents meet our truths. Let's make a trading your full-time future.
So before we dive deeper into how everything works, let's take a quick moment to introduce ourselves. Because we hire every great firm, there's a team of real traders, real people, and real passion.
Well, hey everyone, I'm Scarlett, a full-time trader, former finance analyst, and now a passionate mentor here at WeMasterTrade. I've been in the market for over 2 years and I've seen it all, the wins, the losses, and the late night job session. What I love most? Well, helping traders finally break through that ceiling, the one where capital always seems like the enemy. At WeMasterTrade, I get to flip that narrative. We become the wind at your back.
And I'm Daisy, swing trader, risk management geek, and honestly, your go-to high woman when the market gets good. I start just like many of you, the more chaos, blowing small chaos, learning the hard way. But eventually, I found consistency, and the truth is, it came down to two things: discipline and backing. Now I get to work with WeMasterTrade and support traders like you to reach the level faster without going broke in the process.
And I'm your MC, but more than that, I'm your connector, here to guide you through the WeMasterTrade ecosystem. Oh, I may not be one on the charts all day, but I'll spend years building brands, platforms, and communities that empower creators and traders to shine. So trust me when I say that you're about to discover WeMasterTrade could change the way you trade forever. Now that we have met our team, let's explore how WeMasterTrade empowers traders like you to reach new heights. So our process is designed to be straightforward, supportive, and most importantly, aligned with your success.
Well, at WeMasterTrade, we understand that every trader's journey is unique. That's why we offer two distinct funding pathways to cater to different experience levels and goals. First, we have the challenge package. This is ideal for those who prefer a structured evaluation to showcase their trading skills. And next up, we have the instant funding package. It is perfect for experienced traders seeking immediate access to capital without undergoing a challenge phases. So let's dive deeper into each option.
Let's start with the challenge package. This pathway is tailored for traders who want to demonstrate their proficiencies through the structured evaluations. Here is how it works. First one, the phase 1 trading skill assessment, aim to achieve a % profit target when adhering to our risk management guidelines. This phase elevates your ability to generate profits and manage risk effectively and simulate environments. And the second one is phase 2, stability assessment. Try for a 6% profit target, focusing on consistencies and disciplined trading practice. Successful completion of this phase is okay your red light to manage fund account responsibly. Upon passing both phases, you will be granted access our capitals, allowing you to trade with real funds and share with the profits.
And for those seeking a more direct route, our instant funding package offers immediate access to trading capital. This option is designed for traders who have a proven track record and wish to bypass the evaluation process. And the key features include, first, we have immediate access to capital. Start trading with amount ranging from $10,000 to $200,000. About the profit sharing, enjoy a profit split of up to 90%, rewarding your trading expertise. And the flexibility, there's no restrictions on trading styles, allowing you to utilize strategies such as scalping, day trading, or using expert advisor, which is EA. So this package empowers you to leverage your skills and experience without delay.
But regardless of the path that you choose, our commitment remains the same to provide you with the resources, support, and the opportunities needed to excel in the trading world. But how do we ensure a seamless and efficient trading experience? Let's talk about our cutting-edge platform.
As WeMasterTrade, we prioritize providing you with top-tier trading platform that cater to both novice and experienced trader. Our offering include one, all-in-one platform, a user-friendly web-based system that allows you to manage account, play traders, and monitor performance seamlessly. Integrate education resources to enhance your trading knowledge as you go. Two is advanced trading platform 5 designed for active and professional traders seeking advanced tools and customizations. Features include multi-trading tool indicators and enhanced controls over order. Available downloads on Windows, Mac OS, Android, and iOS device, ensuring you can trade on the go. These platforms are engineered to provide a robust and flexible trading environment, enabling you to scale your strategy effectively.
And beyond technology, we believe in the power of community and continuous learning. As part of the WeMasterTrade family, you'll have access to. First, we have educational courses, comprehensive programs covering various aspects of trading, suitable for all experience level. And the next up, we have mentorship programs. This guidance from seasoned traders to help refine your strategies and decision-making processes. And we have the community engagement, opportunities to connect with fellow traders, share insights, and grow together. Our goal is to foster an environment where you can improve and achieve consistent success.
And you know what? Transparency and trust are the cornerstones of our operations. WeMasterTrade is a fully registered company holding an official MSB license in the United States and complying with international security regulations. Our credibility is further reinforced by multiple industry awards recognizing us as a leader in the prop trading state. But don't just take our word for it. Let's hear from our traders who have experienced success with WeMasterTrade.
Absolutely. Our traders' success stories speak volumes about the opportunities and support we provide. For instance, many have a praise of instant funding process, highlighting how it has enabled them to trade larger positions without risking personal capitals. Others have emphasized our transparent profit-sharing model and flexibility to employ various trading strategies without rejection. The testimonial underscore our dedication to empowering traders and fostering communities of trust and mutual growth.
In summary, WeMasterTrade offers a comprehensive ecosystem designed to support traders at every stage of their journey. Whether you're looking to improve your skills through our challenge package or seeking immediate capital via our instant funding package, we provide the tools, platforms, and community to help you succeed. So, ready to evaluate your trading career? Join us as WeMasterTrade with your talent meets our trust. Let's embark on this journey together and achieve new highs in the trading world. And now that we've covered how WeMasterTrade operates, let's dive into the standard features that make our platform the go-to choice for traders worldwide. Scarlett, why don't you kick things off for you?
Absolutely. One of the most appealing aspects of WeMasterTrade is our instant funding option. Unlike traditional platforms that require lengthy evaluations, we provide traders with immediate access to capital. This means you can start trading with virtual funds ranging from $25,000 to $1 million, with buying power up to $1 million USD right away.
And let's not forget about our profit-sharing models. As WeMasterTrade, We believe in rewarding our traders generally. You can earn a profit share starting at 50% of your first payout, increasing to 75% on your second, and reaching up to 90% from your third payout onward. This structure ensures that's what as you continue to suggest you reap more of the reward.
That's impressive, Scarlett and Daisy. So can you tell us about the diverse range of tradable instruments available on our platform?
Well, certainly, WeMasterTrade offers a wide array of financial instruments to cater to various trading preferences. Our traders have access to forex pairs, major, minor, and exotic currency pairs, to energies, commodities like crude oil and natural gas, indices about the major global indices representing different markets, and about the stock symbols, shares from leading companies across various sectors. So this diversity allows traders to explore multiple markets and diversify their trading strategies.
Speaking of strategy, our platform is designed to accommodate various trading styles. Whether you are into scalping, day trading, or using expert advisors, we have got you covered. Plus, we allow new tradings and offer unlimited contract size, providing the flexibility you need to implement your preferred strategy effectively.
So flexibility is key in trading. So Scarlett, can you elaborate on the educational resources we offer to support our traders?
Of course, at WeMasterTrade, we understand that continuous learning is vital for trading success. That's why we established the WeMasterTrade Academy, offering comprehensive educational resources including trading courses, covering fundamental and technical analysis, risk management, and trading philosophy. Next up, we have platform tutorial helping traders master the use of our advanced trading platform, and we also have webinars and seminars. This is featuring industry experts sharing insights and strategies. Our academy is designed to empower traders with the knowledge and skill needed to excel in the market.
And let's not overlook our daily payout features. WeMasterTrade ensure that traders can request profit or withdrawal dailies with an average payout time of just 48 hours. This means you won't have to wait long to enjoy the fruits of your trading effort.
Quick and reliable payouts are indeed a game changer. So Scarlett, could you shed some light on the scale-up plan that we're currently offering?
Well, certainly, our scale-up plan is designed to reward consistent performance. As you demonstrate steady profitability and adherence to risk management rules, we offer the opportunity to increase your account size. This means access to larger capital allocations and allowing you to scale your trading operations and potential profits over time.
And to support your trading journeys, we provide a user-friendly trading platform equipped with real-time data and event tooling. This ensures you have a seamless and efficient trading experience, whether you are a novice or experienced trader.
So to sum it up, WeMasterTrade combined instant buying, generate profit sharing, and a diverse range of tradable instruments, flexibility trading conditions, comprehensive educational resources, from payouts and opportunities for growth. So it's a platform designed by traders for traders, aiming to provide everything you need to succeed in the financial markets.
Exactly. Whether you're just starting out or looking to take your trading to the next level, WeMasterTrade is here to support your journey every step of the way.
So we'll talk about how you can jumpstart your journey with WeMasterTrade, but let's be real here. Success in trading isn't just about the package that you choose, it's also about understanding and sticking to the rules. So the conditions that we have set here at WeMasterTrade are designed to not only keep you safe, but also help you grow and take your strategy to the next level. Now, whether you're just getting started or you've been trading for years, these conditions will act as your roadmap. So let's dive into the rules that define our trading environment, because if you understand the rules, you can master the game. So first on the list, and arguably one of the most important, is the daily loss limit. So Daisy, you've been through it all, the high, the lows, so can you kick things up by explaining to everyone how this daily loss limit works and why it's so crucial for managing risk?
Absolutely, Aidens. The daily loss limit is one of the most essential protection any trader can employ. It serves as a daily circuit breaker. It prevents you from suffering significant loss on a challenging days. The concept is straightforward. There is a limit how much you can lose in a single day of trading, and it's determined by the greater of two values, your account balance or your equity at the beginning of the day. Let me break down with an example so everyone understands it clearly. Well, example 1, let's say you got a balance of $105 to $5,000, but due to some open trades, your equity, including floating profits and loss, is $107,000 at the start of the day. If you're working with a 4% daily lot limit, that means you can lose up to $4,000. If your equity falls below $103,000, you are done trading for the day. And example 2, on the flip side, if your balance is $100,000 and your equities is $99,000, the same 4% loss limit would mean your account would be liquidated if your equities dip below $96,000. The point is the daily loss limit is there to make sure the best day doesn't wipe out you completely. It's about protecting your accounts and give you the chance to regroup and come back stronger the next day.
Got it. So it's like an insurance policy for your trading day. You hit that limit and boom, your other whole things get out of hand. But what happens if a trader accidentally crosses that line? Can they continue trading?
Well, great question. I don't know. If you breach the daily loss limit, your account is automatically liquidated, or your open positions will be closed and you won't be able to trade again, or unless you buy a new trading package. So here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses, but here's a word of caution. Market fluctuations can sometimes cause you to lose a bit more than the limit, depending how fast the market is moving.
So it's definitely a hot job, definitely something traders should keep an eye on to avoid. But now that we understand what the daily loss limit is and what happens when it hits, the next question is how to avoid hitting that limit in the first place. So Scarlett, you've been in the trading strategies for years. Can you share some practical strategies that traders can use to stay within the daily loss limit? We're all ears.
Well, you got it, Aiden. Staying within the daily loss limit is all about being disciplined and following a solid risk management plan. So here are a few key strategies that have worked wonders for me and countless other traders. First, and I can stress this enough, always use a stop loss. I know this sounds simple, but it's absolutely critical. The stop loss ensures that if the market moves against you, you're out of the trade before things get out of hand. So you can think of it as your safety net.
So that sounds like setting up guardrails on a mountain road, right? It's there to stop you before you go off the cliff.
Exactly, Aiden. It's that extra layer of protection. Now the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you're still far from hitting your daily loss limit and you can keep trading without any major setbacks.
So basically it's like building your defense. You don't put everything in one play, right? You spread out the risk. That actually makes sense. But what about those moments when traders feel tempted to chase after the losses? Trying to get it all back in one trade?
Oh, that's a big one. Chasing losses is one of the biggest mistakes traders make, especially newer ones. So this brings me to my third strategy: don't chase losses. If you have a tough day, take a step back. The market will always be there tomorrow. If you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that can lead to even bigger losses. And before you know it, you hit that daily loss limit and you're out for the day.
So true, it's like trying to sprint when you're already winded. You're more likely to make a mistake. Now, Scarlett, these strategies sound spot on, but how do traders stay mentally strong when things aren't going their way? What keeps them from falling into that emotional trap of chasing losses?
Well, it's all about a mindset, Aiden. Trading is just as much a mental game as it is a number game. You got to stay calm and focused. One trick is to always have a trading plan before you even place a trade. That way, when things get tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just stop, take a break, and step away from the screen and reset your mindset.
So thank you, Scarlett, for those incredible tips on managing deals. Now let's strip our focus to another critical element of the risk management, the maximum loss limit. So this limit is like a long-term safety net, ensuring that you don't deplete your account over time, unlike the daily loss limit, which resets at the end of each day. The maximum loss limit is cumulative, so when you reach it, your account will be locked and the trade will be closed. So to dive deeper into this, let's discuss how the maximum loss limit works, how it is calculated, and why it is essential for traders at every level, whether you're a new trader looking to minimize risk or an experienced trader scaling your strategy. This limit ensures that you don't go beyond a point of no return. So Scarlett, you've got some great insights into the mechanics of the maximum loss limit. So could you work us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
Across Asian, the maximum loss limit is a vital rule that's often overlooked but extremely important. Essentially, there's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The loss limit ensures that your account equity never falls below 94% of its initial balance. So if you start with a balance of $50,000, your account will be closed when your equity falls to $47,000. That's a total allowable loss of $3,000. However, it's not all bad news. If you start making profits, the limit adapts, giving you more breathing room as your equity grows. For example, if your account balance increased to $52,000, you now make $2,000 in profit. Your new maximum loss limit would then allow you to lose up to $5,000 as you're essentially locking in those gains. The maximum loss limit acts as a long-term safeguard. It's designed not only to protect your account, but also to encourage disciplined trading by setting boundaries. The goal is to ensure you don't dig yourself into a hole that is too deep to recover from. So here are a few specific examples. So with the case number one, let's say your account balance starts at $50,000, but your equity drops to $49,000 due to some market losses. You are allowed to lose another $2,000 before your account hits that critical $47,000 threshold and is automatically closed. With the case number two, now if you're doing well and your equity rises to $51,000, you got some extra cushions. At this point, you're allowed to lose up to $4,000 before your account hits that same $47,000 limit. So the calculations to figure out where we stand, the maximum loss limit is calculated by adding the sum of your closed position and factoring in any open positions that are still running. Your trading dashboard will show two key metrics. First, that is the max permitted losses, which means how much you are allowed to lose overall, and the remaining loss, which means the loss left before your account is closed. Now, what happens if you hit that limit? Well, unfortunately, if your equity hits that max loss limit, the system will automatically close your account for the day. All your open position will be liquidated, whether you are profitable or not, and you will be unable to trade for the rest of the day. To resume trading, you would need to purchase a new trading package.
Thanks, Colette, for those insights that definitely help clarify the nuts and bolts and maxims of Summit. So next up, we go into a short break, and then we'll continue with the promotion plans that we're currently and the economic analysis of today, Xander.
Trade. Trade.
Welcome back, everybody. So this takes us into pivoting into our next key topic, the perfect consistency rule. So this rule is critical for ensuring long-term sustainable success in trading, as it helps measure maintain consistency in your profit. So now, to give us a clear picture of how the profit consistency rule works and why it's important, let's turn to Scarlett. So Scarlett, can you break down with us how it is calculated and why it's important for traders to focus on their consistency rather than just aiming for big wins?
Of course, Aiden, the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making big gains on 1 or 2 good days, it's about being consistent. day in and day out. So here is how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total of your all profits and losses over the given period, usually a month or a quarter. You then express that result as a percentage. Let's go through an example. Say your best day brought in $200 in profit, but over the month, your total profits and losses add up to $410. In that case, your profit consistency ratio will be at about 48.7%. This ratio shows how much your performance comes from one standout day. Ideally, you want this percentage to be lower, under 20%, because that means your profits are more evenly spread out across all of your trading days. Now, why is this important? A low profit consistency ratio indicates that you are not just relying on a couple of big wins to stay profitable. Instead, you're showing that your strategy works consistently over time, even on those days when the market isn't giving you big wins. The kind of consistency is the hallmark of successful long-term trader.
So that's a great explanation, Scarlett. So just to clarify, a low ratio means that you're more likely to make steady gains rather than being able to depend on a few good days, right?
Yes. Exactly. When you're too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches where you're not making much more money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother and that your trading is more predictable and stable over time.
So that's incredibly insightful, and it seems like a critical metric for any trader to be serious about long-term success rate.
Exactly. Consistency is the key to sustainable profitability. Big wins are great, but if they're followed by big losses or long period of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
So now that we've got a solid understanding of what the profit consistency rule is, so let's dig into some practical strategies to help traders maintain a low ratio, ideally under 20%. So Daisy, I know that you've got some great tips for us. So can you walk us through some techniques that traders can use to stay within their consistency ratios?
Absolutely, Aiden. The profit consistency ratios is powerful indicators, but it takes careful management to keep it low. So let's talk about some practical way traders can improve their consistency and avoid becoming too dependent on those really big wins. First one is diversify your trades. One of the most effective strategy to keep your profit consistency ratio low is diversify your trades. This means spreading your investments across different markets, asset classes, or even trading strategies. If only you trade one market, say forex or stock, you risk being too reliant on market's performance. By diversifying, you reduce the impacts of any single loss and create more stability in your overall performance.
So that makes a lot of sense. So if I'm currently trading in, let's say, the US stock market, that way could really hit my profit consistency hard. But by adding trades in, for example, commodities or forex, I could try and balance some of that risk, right?
Exactly, Aiden. It's all about the balance. When one market isn't performing well, another market might be doing better. This way, your overall performance stays smoother, and you are not relying on just one or two traders to pull you through. Second one is manage position sizings. Next up is position sizings. One of the biggest mistakes traders make is over leveraging, taking on positions that are too large relative to their account balance. For example, if you have a $10,000 account, putting $5,000 into single trades is risky because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position size small and manageable. Stay no more than 1 to 2% of your account balance per trade. This reduces your risk and help ensure that losses don't overwhelm your profit.
So, right, so it's not just about picking the right trade, but also making sure you're not putting too much of your capital at risk on any single trade. So smaller, more controlled trades lead to steadier results over time, right?
Exactly, by managing position sizing to prevent any single trade from having too much impact on your overall performance. It's all about control and discipline. So another crucial element is having a well-defined trading plan. Without a plan, it's easy to catch up in the emotions of trading, whether there's the excitement of a potential win or the panic of the sudden loss. A solid plan outlines exactly where you enter a trade, when you exit, and how much risk you're willing to take. Having these rules in place keeps you grounded and helps ensure that your trading decisions are consistent, which in turn helps keep your profit consistency ratio in check.
So it's a really good point. A lot of traders, especially new one, badly jump into trades without a solid plan and just making emotional decisions, right?
Absolutely, Aiden. It's so easy to get emotional in the heat of the moment, but if you have a plan, it's much easier to stay disciplined and avoid impulsive trades that could hurt your performance. So this brings us to stop loss orders. A stop loss is an automatic exit that you set up to close a trade if it moves against you. This helps to cap your losses on any single trade and protect your account balance. By using stop loss orders, you can avoid those catastrophic losses that can throw off your profit consistency.
So I like the ideas of using stop loss orders. It sounds like a way to take the emotions out of the decision-making process.
Exactly, it's like setting up a safety net. Once your stop loss is in place, you don't have to worry about watching the trade 24/7. If things go south, the stop loss takes you out of the trade automatically, helping you stick to your plan and avoid large unexpected losses. Another important strategy is to regularly review your performance. Just because you set up a solid plan and strategies doesn't mean you should put everything on autopilot. It's crucial to track your trades, see what's working, and make adjustments as needed. You might find that certain markets or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
So it's like performing maintenance on your trading strategies, always looking for ways to optimize and improve.
Exactly. Just like a car needs regular tune-up, your trading plans the tools. Continuous improvement is key to keeping your profit steady. Finally, and it's a big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after win, emotion can lead to poor decision making. If you stick your strategy and avoid chasing losses for getting overly excited after a good day, you will see much more consistent results.
So that's such an important point, staying calm and disciplined, even when the market is going crazy. But it is easier said than done though, right?
It's definitely take practice, but staying level-headed is crucial for long-term success. If you can control your emotion and stick your plan, you will be far more likely maintain a consistent profit.
So, alright trading lesson, let's dive into another crucial aspect of the effective trading, the risk consistency rule. So this rule is key to maintaining both stability and long-term probability in your trading account. So Scott, I know you've got a great way of explaining it. So can you work us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Adam. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents large swings in your equity and helps mitigate the risk of significant losses due to sudden market movements or unexpected events. Let's break it down a little more. Maximum risk per trade idea, which means you shouldn't risk no more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in all potential exposure. The trade idea definition: multiple trades on the same asset in the same direction are considered a single trade idea. On the other hand, trades on different assets or in opposite direction are treated as separate ideas. So, for example, if you open several positions on gold buy, they would count as one trade idea, but the combined risk must remain under 2%. But if you have the gold buy and a TBY sell, they are treated as two separate ideas, each with their own 2% risk limit. Following these rules smooth out your equity curves, encourages disciplined trading, and most importantly, reduces the chances of massive losses.
So thanks Colin, it's definitely a helpful overview. Now let's refocus back to Allianz for a second. The traders have any of you ever found it tricky to stick to the reconsidered rule, and how does it please help those limits in place? Does it ever get in the way of your trading strategy?
Well, absolutely. Then the main points to remember about the risk consistency rules are the risk per trade idea. Stick to risking no more than 2% of your initial account balance on any single trade idea. This keeps potential losses manageable and ensures you don't risk too much on any one trade. About a single trade idea, if you're opening multiple trades on the same assets and in the same direction, it counts as one trade idea, so your combined risk must stay within that 2%. Separate trade ideas, the trades on the different assets or in different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. So why does it matter? It stabilizes your equity curves by preventing huge swings in your account balance. It promotes discipline by encouraging traders to think more carefully about their risk. And the most importantly, it reduces the risk of major losses that can really hurt your overall performance. So in short, adhering to this rule helps keep your trading accounts safer and support long-term success.
So thank you Scarlett for such a fantastic breakdown. Well, and our vision in WeMasterTrade is to foster having a community of elite professional traders, positioning WeMasterTrade.com as a go-to platform for anyone serious about advancing their career, whether just getting started or you have user experience under your belt. We are committed to providing opportunities and resources to help you succeed at every stage of your trading journey. At WeMasterTrade, we understand that each trader's needs are different, and we're here to help you support with the tools, insights, and personalized packages that cater to your specific trading goals. And if you're ready to take the trading to the next level, you definitely want to stick around to hear about the exciting offers we've got lined up. So the new promotion plan we unveiling today is specifically designed to help traders get more out of their experience with WeMasterTrade and WeMasterTrade.com. So we are focusing on creating more opportunities for growth, increased profitability, and limited success, no matter where you are on your trading journey.
Well, okay, so this is the new update. It's something that every trader should know about. So when you put an effort to grow your account, would it be amazing to actually keep more of what you earned? Well, now with this new profit sharing boost, that's exactly what's happening. So I know that one of the most common frustrations in trading is feeling like your hard work isn't rewarded enough. So right now with the bonus profit sharing feature, you can actually increase the percentage of your profits you keep. It's a total game changer. So here is the details of our extra profit sharing. So when you invest an instant funding package over $175, you will get 1% bonus profit sharing. With over $250, you will get 3% bonus profit sharing, and with over $500, you will get the 5% bonus profit sharing. So, Daisy, can you break it down with a real example?
Of course, let's take a look at the $500 funding package. Normally, with instant funding, you start with a 50% profit share, meaning that for every $100 in profit you make, you will get $500. But it's a new promotion. When you choose a bucket over $500, your profit share jumps from 50% to 55%. That means instead of taking home $500 from that $1,000 profit, now you now keep $550. And why that might seem like a small change at first, think about how much that adds up over time, especially for consistent trader. So in short, the bigger the pocket, the bigger your profit share boost.
Exactly, Daisy. And traders, here's why this is such a smart move. Let's say you're someone who trades consistently and makes $5,000 in profits over time. With a standard 50% profit share, you walk away with $2,500. But with a 55% push, you now keep $2,750. That's an extra $250 in your pocket for simply choosing the right package. And the best part, there's no extra effort required. You don't have to change your strategy or take unnecessary risk. All you need to do is select a higher funding package, and you'll instantly start earning more from the same trades.
So now, some of you might be wondering, why is it such a big deal for traders? So let's feed Daisy on this.
A great question, Aiden. As a trader, our goal is always to maximize return while minimizing risk. The best way to grow your accounts is to keep reinvesting your profits, but that's only possible if you are getting bigger share of what you earn. With higher profit share, you can scale up further, compound your earning, and have more capital to work with your next trade. Think about it. If you are keeping a large percent of your profit, you have more flexibility to diversify your trades, try new strategy, and even withdraw more funds. This is especially important for those who want to trade for the long term. Over time, this small percentage increase adds up to thousands of extra dollars. If you someone to take trading seriously, it's a huge opportunity to level up your earning.
That's such an important point, Daisy. And from a psychological perspective, knowing that you're earning more per trade can actually help you stay disciplined and focused. Instead of overtrading or taking unnecessary risks to hit bigger profits, you can trade smarter because you're already keeping a bigger share of what you make. Plus, this isn't just about individual benefits, it's more traders take advantage of this offer. The stronger our trading community becomes, more capital means better trading conditions, more opportunities, and a stronger ecosystem for everyone.
Alright, traders, you've caught up with experts. I suppose profit sharing is your chance to earn crazy earnings without changing your trading style. All you have to do is choose the right funding package and you instantly boost your profit spread. Visit WeMasterTrade.com now and grab your instant funding package.
Guys, it's an opportunity you don't want to miss. The market is all about making smart decisions, and this is one of the easiest way to maximize your returns. If you're seriously about your trading journeys, this is a no-brainer. Don't wait too long because opportunities like this don't come every day.
So, alright traders, let's talk about one of the hottest offers available right now, the WeMasterTrade BOGO event. So this isn't just a discount or a little perk, it's a game changer for traders looking to scale their account with zero to extra cost. So Scholar, can you break it down for us?
Absolutely, the BOGO event, or buy one get one, is one of our generous promotions to date. Here's how it works. If you buy an account which costs $175 or higher, you will get a free $10,000 instant account. And if you're buying above $340 or higher, you will get free $25,000 instant account. And if you buy a $650 account or higher, you will get free account which costs $50,000. So essentially, when you purchase a eligible instant funding package, you're doubling your trading assets without spending an extra cent.
And let's be real, that second account can do so much for you. Maybe you want to try a different strategy. Maybe you want to split your trades between conservative and aggressive setup. Or maybe you just want a safety net in case one of your account hits drawdowns. Either ways, you now have more capitals, more flexibility, and more opportunities.
Oh, I love that. And this isn't just a program that makes you jump through hoops, right? The BOGO account is ultimately issued after qualifying process. Isn't that right, Scarlett?
That's right. Once your purchase is confirmed, our system automatically issues your bonus account. No hidden steps, no waiting period. It's quick, seamless, and incredibly trader friendly.
And here is the cool part. WeMasterTrade allow you combine BOGO accounts up to $200,000 in total funded capitals. That means if you are a serious trader looking to scale, you can stack the account to trades even longer.
So that huge, but let's talk terms of the rules of keeping fair and balance, right?
Right, so here's what you need to know. First one, each BOGO account allow one payout after you claim your first profit. That account is complete. The second one is only one active BOGO promotion per trader's attempts. Once you complete your BOGO phase, you are eligible for a new one. And the last one is BOGO's account must adhere to the same trading rules as standard instant funding accounts. That means daily drawdowns, maximum loss limits, and profit targets still apply.
So how do you make the most of it? Well, you could use your main account for your try and choose strategy, and the BOGO account to experiment with something new. Try gold scalping, news breakout trading, or running an EA on one and manual trading on the other. You got options, and that's what this promotion is all about.
You can also use it to compare your emotional trading on one account with more rules-based approach on the others. It creates a controlled environment for skill development. It's ideal for traders who are looking to become more consistent and take risk models under real-time funded conditions.
So to recap, with the BOGO event, you got an additional fund account for free instantly with the potential to scale all the way to 200,000 tax balance. You diversify tasks, make smarter, more profit, all while WeMasterTrade covers the risk.
And if you are just starting out, it's a perfect way to get two trades instead of one. You get to refine your discipline, take consistency, and understand the platform better. With time, the experience, and zero additional cost.
Exactly, we designed the BOGO promo with growth in mind, and not just profits, but development. It's a tool to building skill, scaling accounts, and increasing opportunity for every kind of trader.
And remember, the Burger event is only available for a limited time, so don't miss a window to multiply your opportunities, whether you're feeling to trading full-time or still learning the ropes. This is the offer that lets you move forward with confidence. So next up, we are going to break down today's economic drivers and what traders need to watch out for, from inflation shift in the Eurozone to MPI reading around the globe. We've got a lot to unpack. Scarlett, let's start with the euro.
So we'll move to the calendar of today. So the euro or USD is currently showing a bearish outlook. The core CPI flash estimate drop from 2.6% to 2.5%, signaling that inflation in the eurozone is cooling off. Now, this might seem minor, but it carries major implications. Low inflation often fuels speculation that the European Central Bank, the ECB, could ease monetary policy sooner. That alone could put additional pressure on the euro.
Exactly. On the other side, we have the US ISM manufacturing PMIs, which came in at 49.5, still in contraction territories, but a slight bump up from the previous 50.3 reading. While it's not a huge move, it suggests that the U.S. manufacturing sector may be stabilizing. This stability could support the U.S. dollar, especially when contract with a weakening euro.
And tonight at 7:30 p.m. we're hearing from ECB President Lagarde. So Scarlett, how important is this speech?
Is potentially huge if Lagarde strikes a dovish tone, meaning she hints that future rate cuts or slower economic activity expect the euro to drop further. But if she surprises with any hawkish notes, we could see some short-term volatility.
Switching gears, let's look at AUD USD. There are lots of volatility expected today. The RBA kept its cut rate steady at 4.10%, which align with forecasts, but traders are more focused on what comes next. If the Reserve Bank of Australia's hint that rates will stay high for an extended period, the Aussie dollar could strengthen.
Yes, but keep your eyes on the APA press conference at 11:30 a.m. Hawkish language will likely support the AUD. On the flip side, if they bring up concerns about slowing growth or mention a need for stimulus, that could pull the AUD down.
Also important, commodity prices are down 6.5% since Australia is a major exporter of resources like iron ore and coal. Lower price here could negatively affect AUDs. Weak imports weaker AUDs. That simple.
So now let's turn to GBP USD. So where's the reaction is a bit unclear, Scarlett?
The UK final manufacturing PMI remains at 44.6, showing continued contraction in the sector. That's not good news for the pound. However, at 3:15 p.m., NPC member Green is scheduled to speak. Her comments could shift sentiment quickly.
If she saw hawkish like Green need to stay high to fight inflation, we might see the GBP gain short-term strength. But if she emphasizes economic risks or slowdown, that would put GBP lower.
And finally, let's look at USD CAD, Scarlett.
Canada's manufacturing PMI just came in at 47.8, another sign of construction and economic slowdown that could put some pressure on the CAD.
Don't forget about the oil price too. The CAD typically follow crude. If oil price falls, so the Canadian dollars. If oil rebounds, it could have upset some of economic weakness.
And of course, a strong US dollar continues to push USD CAD higher. In today's US data keeps showing resilient, that part might continue its upward move.
Well, in summary, it's a dynamic day across all major pairs. Stay alert, manage your risk, and as always, trade with confidence.
And there you have it, traders, a comprehensive look at what makes WeMasterTrade not just another platform, but a trade partner in your trading strategy. So today we unpack some of those most powerful offerings. So from the BOGO event, which gives you instant access to a second funding account for free, allowing you to test, scale, diversify without doubling your investment, to our detailed look into the latest economic calendar, breaking down critical market move like news like horizontal inflation to US and Canadian PMI numbers. So we also discuss how traders can use these tools and insights strategically, whether it's using the BOGO account to try a new trading style, or at WeMasterTrade, we're not just to fund your trade, but also to equip you with everything: the capital, the technology, the real-time insights, and the community, so you can perform as your highest level. Whether you're here for incredible promotions like BOGO, the chance to enjoy the elite competitions, or to take advantage of the market volatility with razor-sharp timing, remember one thing: you bring the strategy, we bring the support. Together, we master the market. So don't wait on the sidelines. Visit WeMasterTrade.com, explore our next package, and let's start growing your trading strategy today. So until next time, trade smart, confident, and always trade with purposes.
Trade.